Good evening. We start here tonight. Pulp and packaging company Sappi's net profit surged from 231 million rand to over 9 billion rand in the year to end September. The company faced several headwinds, including extreme weather-related events, the lingering effects of the COVID-19 pandemic in China, high inflation triggered by the war in Ukraine, and global supply chain disruptions. Sales for the year are up by more than 1/3, with cost of sales increasing by 1/4. In its outlook, Sappi noted that macroeconomic uncertainty has increased in recent weeks amid apprehension over lockdowns in China. We are joined by the CEO of Sappi, Steve Binnie, this evening to tell us more about their extraordinary set of results. Thank you very much, Steve, for joining us this evening. It's quite a good set of results. The market quite excited, but this has not come easy at all at a time where we have seen the ravages of the Ukraine-Russia war, the inflationary pressures, particularly on energy. How has that impacted on the company, despite the fact that you have resumed paying a dividend?
Yeah, indeed. Thanks for the opportunity. We're all very proud of these results. And as you indicated in your intro, this has been the culmination of a lot of great work done across the business. And I'm very proud of all the people at Sappi that have contributed to this success. It's record year, our highest ever profits, and you know, we achieved a number of milestones. To your question specifically, we have large European operations. It's just around 40% of our business, and it's the increases that we've seen in energy prices, particularly natural gas, have had a significant impact on Sappi and on our operations. We use natural gas at our mills in our production processes, and it's created challenging times, headwinds for us. But what the team have been able to do is, because of tight markets, because of a rebound in demand for our paper products during the course of the year, we were able to put through the selling price increases that you referred to offset those rising costs. It wasn't easy, and as you can imagine, challenging to implement, but ultimately it's been very successful. And it's, as I say, a culmination of a lot of great work. We've been repositioning this business over a number of years, and I think the success is shown in their numbers.
What has led the company to divest from 3 important mills in Finland, Germany, and the Netherlands? You divested, as you announced through the JSE SENS. What has led to that divestment?
Traditionally, Sappi has been a graphic paper business. Now, graphic paper is high-end paper that goes into magazines, high-end magazines, advertising, marketing literature, catalogs, and so on. And you'll appreciate with the shift towards iPads and internet advertising, that has been in decline. And what we've been trying to do for a number of years now is reposition away from graphics towards packaging. And packaging has wonderful opportunities because many of the retailers, many of the big brand owners want to replace plastics with paper. So it's created tremendous opportunities, but we did have these other assets in a declining segment. So the sale that we've undertaken is part of a long-term strategy to reduce our exposure to graphics and ultimately redirect and reposition the business into the growing packaging segment. And we're very excited. We think it's a good deal for Sappi, and it has opened up opportunities to invest in other areas of the business.
There is a lot of macroeconomic uncertainty that is abound right now, with a number of issues that we've spoken about already: the war in Ukraine, inflationary pressures, the energy crunch in Europe, and of course there are a number of people who are still concerned about 2023 being a year of a possible global recession. You are saying that you are going to navigate that particular path by ensuring that you target a $1 billion net net debt when it comes to in the next couple of years. How is that going to help you navigate what could be a difficult 2023?
Yes, the challenge, as you've indicated, there are many challenges out there. As part of that strategy that I talked to, repositioning into packaging, packaging tends to be more resilient and has less volatility than graphic paper. So that's one thing that will help us withstand. But specifically to your comment on the debt, for many years, Sappi had high levels of debt, and we made it one of our important strategic priorities to reduce debt and strengthen the balance sheet. And having done that, and our debt is almost halved in the course of the last 18 months or so. And because of that, we're now in a much stronger position to withstand those challenges that are out there. Yes, the business might slow down and profitability might be a little bit less, but we can still generate strong cash flows, and it will enable us to invest in those segments where we want to grow in the future. So we're in a much better place. We've transformed this business, and we're very excited about the opportunities despite the headwinds that are out there.
Steve, we speak to a number of CEOs and ask them the same question when it comes to the local economy, and to point out one of the major bottlenecks for your group when it comes to your performance locally. Which one would it be? Because there's a number out there, but the one that sits atop of all is the crisis at Eskom.
Indeed, it's we generate a lot of our own power at our mills, and in fact, we do sell a bit of energy back into the grid, but we are still exposed at other mills, and the challenges that Eskom have faced have had an impact on our business. And earlier in the year, in fact, we lost some production, which has impacted on our profitability, and as you'll appreciate, has disappointed our customers. We continue to look for opportunities to reduce our dependency, and if we can boost our capacity to generate our own electricity, we'll do that. There's an added benefit to that because, as you know, most of Eskom's energy is generated from coal. We can produce energy from biomass, which is a sustainable, greener energy source, and that is another one of our strategic objectives. On top of that, and you talk about Eskom, the other big area that we are exposed to is Transnet. We are a huge exporter out of South Africa. We're a huge exporter out of the Durban port, and what we've been faced with, with the recent strikes and the ongoing challenges at the port, is that it's created supply chain problems for us, and we've been struggling to get our product out of the country. So we've been looking at alternative sources. We've started moving a little bit of product through Maputo in Mozambique, and at Durban itself, most of our product is transported through containers. We've been looking at break bulk options to give us more capacity. But indeed, to your point, it is a major challenge for us.
Steve, I thank you for your time this evening, for joining us to wade in some more on your company's extraordinary new record for earnings in the last quarter. Steve Binnie is the CEO at Sappi, talking to us there about their extraordinary when it comes to their earnings in the past quarter, going from just 231 million rands to 9 billion rands.